Our next guest thinks monetary policy not as restrictive as rates would suggest. He's Jefferies' chief market strategist and a new CNBC contributor. Welcome.
Thanks, David.
You're welcome.
I like that. I like the combo title.
Happy to have you as a contributor, although you always contribute.
His name is David Zervos, by the way. Yes, we'll just...
Yes, and to those who don't know, David Zervos. Yeah. All right, so you've been saying this for a while that things are a bit less tight, I should say, or less restrictive than we otherwise would think because of the balance sheet.
Yeah.
Continues,
and I think with the QT tapering, it's probably set to continue even more aggressively than I might have even thought at the beginning of the year. So I think that's been a helpful tailwind. I guess I don't have a lot new to say on that subject. The new stuff seems to be the beginning of this month. Just a lot of trades getting unwound, a lot of macro stories, whether it's copper, the yen, oil, a lot of stuff happening that seems a little bit out of the ordinary to me. Mike and I were talking about that before we walked on set. And I haven't put it together. I don't know what the month of June is really all about.
So you recognize it as out of the ordinary, but
it
you're not quite sure.
Well, I think there's a seeming change, at least budding change of character. I just wonder about where you've seen Treasury yields back off. You see real higher sensitivity to any sign of softening U.S. growth. I guess that was the ISM reaction yesterday. And yet usually when yields have come down, you've seen, small caps and cyclicals and banks rally, and you broaden out the market, and then the big tech stocks can maybe take a breather. Didn't happen yesterday. I mean, obviously, we're kind of churning around on equities. I just wonder what you think the message is, bonds rallying in the face of these numbers, which I'm not sure if the overall complexion of the growth picture has changed.
And the bond rally was pretty big yesterday, and there was no data, right? There was no real story for that.
I guess the ISM, but
not a huge one. But I guess for me, I don't know. I'm going to wait and see. My baseline for the summer, David, is kind of a lower vol, Fed's waiting, patient, well-positioned, all the words they've been using. They're not in any rush. We're going to all talk about politics and what Trump versus Biden means, and that's going to get, hotter and hotter as the debate happens. But I think the economic story, and from the Fed's perspective, is very much on hold. We need 3 months of something to confirm there's a move, if at all. And so I feel like the volatility, it's a summer volatility story unless we get a big shock of some, geopolitical nature. So that's kind of how I'm thinking. I'll say I was a little surprised at the size of the market moves to start the year. I thought, and the coordination unwind of a lot of trades that I hear our clients talking about. Mm-hmm. So we'll wait and see. So a little bit of to be determined.
Yeah. Sarah's got a question.
David?
Yeah.
Yeah. I'm just curious why the equity market isn't responding better to the rally in bonds. If equity markets have been craving Fed cuts, lower bond yields, soft landing story, shouldn't this be received much better?
You would have thought so. The story because I'm looking at commodities as well, just seeing copper 10+% off the highs, everything. And oil, the oil start to the year was very interesting to me. So, we're back to...
Start to the year or the month?
Start to the month, yes, Mike. But, we're back to really low levels.
Yeah, we're back
oil.
to almost basically flat
unwound the year after kind of a lot of reasons why you think it should be higher, right? So it feels like a slowdown story getting priced in. If I had to make my guess, people are getting more nervous about a period going into the election, maybe. And Sarah, you're there talking to these CEOs. This is a time where you're not probably jumping into a big investments project. You're going to wait and see what happens until November. So maybe we get that 2 quarters or so of slowing / stagnation. And,
so
and maybe the market's sniffing that out.